Less than a minute away from the opening bell in the fourth quarter, trading at the CME's interest rate contract shot up 29% from the year earlier as interest rates inevitably go higher. How will it impact the exchange's products and volume? The CME's Terry Duffy back with me for the entire hour. Terry, you've already seen an enormous amount of interest in this product line given this anticipation that rates are going to rise.
And that's an excellent point. You know, the discussion started in December about the tapering, and then we started to see it right in the beginning of the year. So for us to go up 29% was not a surprise to anybody, just on conversation alone, that they're going to continue the tapering process and look, as I said earlier with John, maybe into a more normalized rate environment. John's a little bit more optimistic than I. He's already saying it's going to be in 2014 that rates will rise. So quite interesting from his standpoint, too.
What about the global story? And the bell has sounded, and we are expecting a flat showing at the open for stocks. But what about futures and swaps and the business globally?
Yeah.
I know you're doing something in Asia. Some of your competitors are in Singapore.
Yep. Everybody's all over the world now. We're actually getting very big in Europe. We have a big clearinghouse in Europe now, and we're also going to have an exchange in Europe coming up shortly. We have presences all throughout the Asian community. Roughly 22 to 25% of our revenue now comes from outside North America, Maria. That's up 10% just in 1 year from 2012. So we are seeing, a lot of the diversity coming from CME's revenue from all over the world, which is good. And our competitors are doing the same exact thing.
How do you see Europe right now? There's a lot of feeling that we've seen the worst, but it's going to take a while for the economy in Europe to really come back to where it was.
I said a year ago I thought people were going to start to buy Europe, and they did. And you got to buy breaks and sell rallies. We're all traders, Maria, and it's hard to make money when you buy the top, and it's hard to make money when you sell the bottom. So you're seeing savvy people a year and a half ago start to snoop around a little bit in Europe and start to pick up some assets, and I think obviously they've done quite well. So I'm fairly optimistic, the European community.
So the valuation's better in Europe. What about the valuations in the U.S.? I mean, what do you think when you see a company like WhatsApp acquired for $19 billion?
I don't know.
WhatsApp?
I don't know if I'm qualified to say WhatsApp for $19 billion, but Mr. Zuckerberg obviously feels that he needs it for his company, and it's a very large outfit, and he's looking to diversify like he should be doing Facebook. So I think it's the cost of doing business.
Yeah. All right, let's talk a little about regulation. Yeah. DoddFrank is going to change the game for a number of companies. How does it impact you? You've got now all this, the dark pools coming your way, the derivatives contracts coming your way. Are you working with the banks to
yes.
Get
I
this
I didn't start working with the banks last week. I've been, in New York quite a bit over the last several years working with the banks, trying to make sure that they're comfortable clearing their business at CME Group. We have done a tremendous amount of clearing for OTC swaps, Maria. And when you look at our interest rate business, most of these swaps, the interest rates ones, the standardized ones that trade a lot, are vanilla in nature anyway. And for them to convert into futures is something very easily for them to do. And if they don't want to convert them to futures and just want to clear them at CME, they can also use our futures products to get portfolio margining. And we have 6-7 firms saving billions of dollars in efficiencies of capital by putting those under one clearinghouse today. So yes, we're working very closely with the dealers.
It's fascinating what's going on because this is a whole new game for you. I mean, a whole new business.
It is a new business for us, and what's most important is the risk management associated with it. And there's different rules for over-the-counter swaps clearing versus futures clearing, as we know. There's 5 days margin versus 1 day and things of that nature. So that the overall systemic issue of the clearing of this, we feel very comfortable with it. And, we're going to continue to move forward and grow this business.
Yeah. How do you feel about these proposals about higher taxes here as part of DoddFrank as well? Okay, so I was talking to somebody last night, and they were like, 30% tax if you're a dedicated SiFi, systemically important financial institution. Now, you're not necessarily a SiFi, but you are what?
We are a SIFMU. What is
SIFMU?
Which is a systemically important financial market utility. It's a mouthful.
Okay.
But, it just...
Are you going to have to pay a 30% tax? Are you hearing this?
No, we're not going to pay 30% tax. It's just different designations. There's cost associated with being a systemically important institution, whether you're a bank or an exchange or a clearinghouse. And yeah, you have to abide by different rules, which always cost a little bit more money, but also gives you other benefits associated with being a systemically important institution.
When I was talking to the leader in Europe, Schäuble, he's talking about a transaction tax. I mean, are we going to see a transaction tax for SIFMUs?
Penny wise, dollar foolish transaction taxes.
Right.
I mean, anytime you widen the spreads of products, which taxes do, it ultimately ends up on the consumer's lap because those spreads widen and it gets passed off to the consumer. Keep the bid offer spreads tight on all products by keeping them efficient and keep the taxes out of it.
I mean, I recognize all this new rulemaking is to protect the markets and protect investors, but I don't know, some of the companies that they've called SiFi, systemically important financial institutions, I'm thinking, wow, I mean, I didn't realize this company was so important to the broad landscape of the global economy. But obviously, you're a market utility, and CME Group is.
Oh, we're one of the things I don't like being a SIFMU is actually the word utility, because we're a for-profit exchange and a highly, a publicly traded company.
Right.
So not a utility, but it's just a designation that they came up with. So we'll just leave it at that.
SIFMU.
SIFMU.
All right. But, DoddFrank does change the game in many ways. What areas of financial services do you think are the winners in Dodd-Frank? What areas do you think still present the big challenges?
I think it's truly yet to be determined, Maria, because right now, as of February 15th, we had the first mandate to kick in for these products to be traded on a SEF, which is a swaps execution facility. So if you're not going to trade them on a central limit order book like Globex at CME or on ICE's platform or somebody else's, you have to trade them on what's called a SEF. So we saw that. We're starting to see a little bit of activity there. There's a handful of them that have registered, and we'll see who's ultimately successful in that and how much of that business stays on a SEF or how much of that business just gets converted onto a central limit order book.
Now I know why you're coming to New York so much, meeting with all the banks about this big business coming your way. Terry, that's great. That's great info. Thank you for that on the Dodd-Frank implications. All right, we'll take more with Terry Duffy throughout the hour. I want to go back to Nicole Petalides on the floor of the New York Stock Exchange.